Hello and welcome back to my YouTube channel. My name is Jens and I will cover every weekend the price action of these four assets: S&P 500, US oil, gold and Bitcoin, so that you know what to do in the markets the weeks and months ahead. We will drop down from the weekly to the daily and then cover also the 4-hour time frame for more short-term trades and entries. Let's start directly with the S&P 500 index at the weekly time frame. Yeah, like you can see at the weekly time frame, we are making new all-time highs in the index. We got a slight divergence here at the weekly time frame where price is making higher highs and the MACD indicator is making lower highs. This divergence normally ends in a correction, but at the weekly it's not that accurate, so you can say, okay, now we'll follow a correction. That can take some days and months to evolve. Last time we had a situation like this was back before the war Ukraine against Russia, or vice versa. And here the MACD divergence was also there, and afterwards we have seen a huge correction. That hasn't to be that huge like here. It can be also a smaller one, but we had a good run up, so could be likely that we will see maybe beginning next year or so a little bit huger correction. Let's drop down to the daily time frame. Here we can see that the daily white solid uptrend line is still intact and valid. We're making nice higher highs and higher lows, so an intact uptrend. And lately at Friday, we have seen a green candle pulling to the upside, making a slight higher high. That was also the entry level for my trade, but we will talk about that at the 4-hour time frame. Here, the 4-hour time frame, I was setting my trade up, the entry above the last high, and my stop loss below here, this price gap to protect my position. It's also below the 10-day moving average, which can be a protective structure for price. The ideal take profit would be below this 4-hour support and resistance zone and the low of the last movement. But then my risk reward ratio wouldn't be that great. I don't expect that we will see a huge run to the end of the year. Or maybe there will be a huge run, but I'm not so sure that I want to risk that much, especially with the MACD divergence at the weekly time frame. So I was setting a small stop loss of 0.5% of my account balance, and I would take it out if we reach 1.5 of my risk reward ratio, and that would make 0.8% plus, or $800 in my account balance. That would be great. Yeah, what is not allowed to happen, that's the positive scenario. The negative scenario would be that price comes down and takes me out of my trade. Wouldn't also be that problematic if we hold this white solid daily uptrend line. Then we could look maybe for re-entering the market to the long side. But if we break it, especially below this 4 support and resistance zone here, which is covering also the last low of the movement, that would be negative. So if you see a move like that, then we could expect that we will see the correction that's announced at the weekly time frame with the MACD divergence, and we will retest the weekly support and resistance zone here with this daily support and resistance and the weekly solid orange uptrend line. And from there on, we can then see if we recover, making higher highs and higher lows again, and then take a long, or if we see another breakout, that would be a huge correction. And then, yeah, we have to wait and see, and maybe we could even profit here from a small short trade. But I think that's the more unlikely scenario. Because of that, I'm at the moment positioned in a long trade in the S&P 500 index. Yeah, that's it for the S&P 500. Let's switch to US oil. US oil, we are also starting at the weekly time frame. Here we can see a red monthly downtrend line that got broken to the upside, and afterwards price moved into a weekly consolidation here, supported by the 200 moving average. Price already broke this orange downtrend line to the upside, and since then is consolidating around it, but not making a lower low so far, so the trend stays there where it is. Now the 200 moving average is above price, that is resistance, and because of that we have seen already a move lower. I was participating in it in later episodes. You can rewatch them if you want to, and made some nice profit trading it to the downside. But now I think it looks like the low could be in, not for sure, but I would rather like to trade to the upside than to the downside at the moment. Let's drop down to the daily time frame. Here you can see this daily triangle where price moved inside until it decides to one or another side. In this case, it was to the downside. And there was also my last real profitable short trade in US oil. Afterwards, a daily downtrend line got broken to the upside and we formed an ABC pattern at the daily time frame. A, B, C. That's a normal correcting pattern. C has to be lower than A. In this case, it was just slightly, but you can argue that this is a double bottom scenario. So the next likely future move would be to the upside. For that, we will zoom in at the 4-hour time frame, where each candle represents 4 hours of price action. You can see that I was able to draw above this daily ABC pattern a downtrend line. That one got broken to the upside. And now if we zoom even more in, you can recognize an ABC pattern at the 4-hour time frame. A, B, C. Point C isn't defined yet. We have to see where this movement ends. My entry of the long trade would be above point B, and then I would risk 1% of my account balance to achieve a nearly 3-to-1 risk reward ratio. I'm risking, like I said, 1%, and the stop loss would be placed below point C if it's clear where point C is. You have to adjust over the week and see what price does. The take profit would be slightly below the peak of this daily triangle formation, because normally this peaks or the end of this triangle formation acts again as resistance. So we could find resistance here and price then bounces again up to the downside. So there would get out of my trade with 3.5% in profit. That would be really great. But if we see price decline further, I'm not going inside this trade. Then I will delete the trade and I update you like usually next weekend again what we do then. So long trade set up, short trade not interested at the moment. That's all for US oil. Let's switch to gold. Gold, an impulsive asset at the moment, starting also at the weekly. We can see this beautiful resistance zone here that got often tagged by price historically, but then got finally broken to the upside. We then have seen a surge to the upside, a little bit huger correction, another surge, and now we are in the second huger correction. At least it seems like. I would expect that we will get another dip. We had the first leg, the second leg up, and the third leg is usually lower than the first leg down. So I would expect that price will stop around the 0.382 Fibonacci retracement level, measured from here the low to the high of the movement, and in combination with the weekly orange solid uptrend line. That would be a nice spot for also long trades, but we will see. If we drop down to the daily time frame, we can see that also the daily uptrend line was broken to the downside. We had a negative MACD divergence. Price was making higher high, MACD was making lower highs, so a correction is in front of the door. We have seen the move. It was a little bit aggressive, like so the counter trend move to the upside, a little bit higher than expected. But now I think it's time for leg C. I don't know for sure if we will see leg C extend to this weekly uptrend line. Could also stop here at the 0.68 Fibonacci retracement tool, measured here also from the low to the high. This is also a highly important zone. Maybe we'll also move a little bit sideways and then meet both of these things, the uptrend and this daily support and resistance zone in combination with the Fibonacci retracement level. So what do I want to do? For that, we again drop one time frame lower at the 4-hour time frame. Here you can see the ABC pattern from the daily. And now if we assume that price will complete this pattern, you can say that this flag here has to be broken to the downside. If that will be the case, I will enter a short trade in gold below this point here, below the flag. And then I would want to achieve a risk reward ratio of 1.75 to 1. And this would end in a take profit slightly above this daily support and resistance zone with nearly 2% profit in the account balance. I'm risking for that also 1% of my account balance. And that would be the case if we get to our entry level and then reverse completely. And then I would get taken out of my trade in a loss if we see prices above this flag. Yeah, if we see prices directly rise on Monday and exceed my stop loss level, then I will not get into this trade and delete my actual trading setup, and I will re-inform what we can do next week in my next update video. At the moment, I'm not seeing a good scenario where I can trade this market to the upside. Maybe this was the lowest low, but I think it's more likely that we'll see another leg. That would be also healthy for this overall massive bull run to reset sentiment and then start from there fresh and new again with another strong move to the upside. That's it for gold, I think. I hope I covered everything. Let's drop, last but not least, the Bitcoin. Our last asset, Bitcoin, in the row. Also, the weekly time frame is the first one we want to analyze. Here you can see that we exceeded the all-time highs from November 2021 and then went into a massive weekly consolidation here, slightly directed to the downside. But then we had the final break and then a massive surge to the upside, nearly hitting the $100,000 level for Bitcoin. A historical event if that happens, and I think it's not so far away. I'm currently in a trade, like you can see here, and I was also taking already some profits. For that we dropped to the daily time frame. Here you can see this price channel where Bitcoin was moving a long time inside before we then have seen the breakout to the upside. My entry level was at the breakout of this retest to this price channel, and then the entry was pretty perfect. We had a huge run to the upside. Then my first take profit was around the $85,000 level, where I was selling 1/3 of my position, and then I was taking a profit with another third of my position around the $95,000 level. Then we stopped here at the $99,000 level and reversed a little bit. And I would also assume again that this one here is like A, like B is a counter trend, and that a like C will follow. I already also placed, like in the other assets, Fibonacci retracement tool measured from the low to the high here, and I could well imagine that we will see price testing the 0.382 Fibonacci retracement level here. At Bitcoin, nothing is impossible, so we can likely see that we will plow right through the next week to the upside with and not seeing correction like this, but I think this would be the likelier and more healthy scenario for Bitcoin. Let's drop down to the 4-hour time frame. Here you can see that we had also a MACD divergence and price, higher highs in price, lower highs in the MACD divergence, and a broken 4-hour uptrend line to the downside. So you can also throw in a short-term downward line at the 4-hour time frame, got slightly broken and then went back below it. Maybe we'll see a rising Bitcoin price again of above this high here. That could well set up for a long trade if you are not yet in Bitcoin involved short term. And then the stop loss I would probably place below this point here. I'm not doing that because I'm still with 1/3 of my position in the trade, risk-free, because I already moved my stop loss from here to my entry level. So nothing can happen to this position. At the moment, $3,000 in profit. Yeah, I expect, like I said, a move to the 0.382 Fibonacci retracement level that could well meet the 4-hour 200 moving average, and then that we'll see next move to the upside, blowing above the $100,000 level. I also plan to take some profit there, around $104,000 US. If you want to trust the Fibonacci retracement level, another good point of taking profits could be here, this area around $108,000. I think the maximum we will see is $110,000 before we then get another correction, probably back to the $100,000 level. That could be a scenario I could imagine, but I'm not a magic man with a glass bowl or a crystal bowl, and so you have to make research by yourself. That's how I approach the Bitcoin trade at the moment, and so far it wasn't a failed trade, and indeed it was the most profitable trade I had so far with this account, so that I'm ending up at the moment with 17.5% profit in account balance and another $3,200 unrealized profit. So far so well. I hope you got a good trading week starting next week on Monday, and I hope that you will get back into my channel the next weekend. We here and see us. Bye bye.